Okay, imagine this. You start a business with just $60,000 and a battered satellite dish.
Right, on a stormy night, selling gear from a truck in rural Colorado. That sounds pretty gritty.
Totally. Then, 45 years later, that same gamble turns into a massive $23 billion Spectrum deal.
And then another $17 billion agreement just weeks later. It's wild, pushing you right back into the billionaire ranks.
It's such an improbable story. It almost defies belief.
It really does. And the name behind it all, Charles Ergen, the founder of EchoStar, Dish Network's parent company.
Yeah, his journey is just like a masterclass in playing the long game.
That's the perfect term for it.
And this deep dive, it isn't just about, tracking massive business growth.
No, it's more about understanding Ergen's relentless strategy, that often contrarian long game view.
Exactly. The strategy that let him pivot from selling those first satellite dishes to these huge wireless Spectrum deals we saw in, August 2025.
And it wasn't a smooth ride either. That's what's so compelling.
Not at all. His path was full of massive struggles, right?
Oh, yeah. Losing millions of TV subscribers, piling up over $34 billion in debt.
Facing constant criticism. I mean, that would break most people.
Absolutely. But he just relentlessly stayed in the game.
So tonight, our mission is really to unpack that unique mindset. The controversial bets, the unusual habits.
From one of America's most unlikely billionaires.
Right. And the core question for you listening is, what can you learn from Charles Ergen about redefining money, making strategic choices?
And playing that long game in a world obsessed with, instant gratification.
Let's get into it.
Okay, so first, we really need to understand his unconventional view of money. It was never about comfort, always leverage.
Let's go back. 1980, Charles Ergen and his wife Candy, they pool their savings just $60,000.
Which wasn't nothing then, but still, for starting this kind of venture.
Right. They buy 2 massive C-band satellite dishes. These things were huge, remember, like 10 feet across, the original big dishes.
The precursors to the little Dish Network ones we see now. A serious investment back then.
And they're literally selling them from the back of a truck, driving around rural Colorado. It's a total shoestring operation.
So much so that, get this, a fierce windstorm actually flips their trailer, smashes one of the dishes.
Ouch. For most people, that's game over, right? End of the venture.
Definitely. But for Ergen, it was just different. The start of a different calculation.
You said it perfectly. That moment wasn't defeat. It was the first real test of his core belief.
Exactly. Money isn't for comfort. It's leverage. Capital was always about securing scarce, undervalued assets, things that could unlock future opportunities.
He wasn't spending to look rich. He was saving to deploy that capital strategically.
It makes you think, doesn't it? How many of our own money decisions are about now versus, positioning for the long haul?
And he backed this up with some incredibly bold early bets. This is where his path really diverges.
Yeah, early 90s. Cable was the focus for most. Ergen, different direction.
He raised, $335 million through risky junk bonds.
Junk bonds, high yield, high risk debt. A very aggressive move for financing.
And he didn't do it for quick profits or boosting subscriber numbers immediately. No.
He used that cash to buy finite, irreplaceable orbital slots in space.
Orbital slots. Okay, break that down. Like parking spots for satellites.
Pretty much. Prime real estate in geostationary orbit.
Yeah.
Scarce, highly regulated, and absolutely critical for satellite communication.
So grabbing those early, especially with risky financing,
gave him a strategic chokehold on a future industry. Few others saw it that clearly then. It was visionary. Laid the groundwork for Dish Network, way beyond just selling dishes from a truck.
Which brings us to that famous paradox, his frugality, even after building a multi-billion-dollar empire.
Oh, the stories are legendary. Reusing old office furniture. Flying coach on long international flights.
Seriously, flying coach.
Yeah, and personally scrutinizing small corporate expenses. You hear about late-night calls questioning about printering costs.
Do we really need this?
Yeah, exactly. But it wasn't just being cheap, was it?
No, it was a deliberate strategy, deeply ingrained.
Every dollar saved was another bullet in the chamber. That's how he saw it. Ammunition for those bold, asymmetric bets others wouldn't touch.
So this discipline let him redefine money. Not comfort, not perks, just fuel, pure fuel for the long game.
While others spent to project success, he saved to buy the assets for survival and power when the market inevitably turned.
And that strategic power, that really defined his next major pivot, didn't it?
Absolutely. Because while he was building this war chest, his main business, Dish Network, was facing well, existential threats.
Dish had its peak, right? Over 14 million subscribers in the early 2000s.
Glory days. But then came streaming. Netflix, Hulu. We all saw it happen. Consumer habits just completely shifted.
And by 2025, Dish's traditional TV base had shrunk to around 6.7 million. A lot of people saw that as, well, the end of the line.
And they weren't entirely wrong about traditional pay TV declining. But Ergen, he had that contrarian vision.
He wasn't looking at the subscriber numbers as the main thing.
No. He saw the real crown jewels weren't the customers, who were becoming, let's face it, fickle. It was the finite, invaluable stuff.
Spectrum licenses. And the satellite infrastructure he'd built.
Exactly. Spectrum, those electromagnetic airwaves carrying everything wirelessly. Phone calls, data, 5G, satellite to cell. All of it.
It's like a beachfront property for the digital world, a limited resource.
Precisely. And he endured so much criticism for focusing on it.
For years, right? Quietly buying up billions of dollars worth of spectrum.
While Wall Street and critics mocked him. Hoarding unused airwaves, they said.
All while his TV business was bleeding subscribers and revenue, it must have taken incredible conviction to stick with that.
Year after year, facing public doubt, seeing the main business decline. From the outside, it just looked like a company failing to adapt.
It really did. But he understood the value of those airwaves would only go up as wireless demand exploded. He was playing a totally different game.
And the payoff. Wow. August 2025. It was dramatic.
That huge $23 billion spectrum sale to AT&T.
And then, just weeks later, another $17 billion deal with SpaceX.
These weren't just cash injections, were they?
No, they fundamentally reset EchoStar's balance sheet. Eased that crushing debt load over $34 billion. It was massive.
It really makes you think about your own assets, doesn't it? Beyond the obvious stuff, what underlying capabilities are you investing in that outlast trends?
Ergen was playing on a decades-long timeline, not quarterly reports. It's a powerful lesson. Value foundations over fleeting wins.
Okay, let's shift to his daily habits. Because Charles Ergen really is an outlier among billionaires. His lifestyle tells you a lot.
Yeah, we mentioned the frugality. Mismatched secondhand office furniture, flying economy, reviewing small expense reports himself.
It wasn't just personal preference, though. He built a culture around it. Money was guarded. It was fuel for strategy, not perks.
Right. It was about instilling discipline, prioritizing the long-term mission above everything else.
What's really interesting is pairing that frugality with calculated risk-taking.
Yes. His background as a serious gambler. Poker. Blackjack. He played with professional discipline.
He said himself it trained him to think in probabilities, understand expected value.
And crucially, how to manage risk by structuring it, not just avoiding it.
His goal was always, what was the quote? Survive long enough to capitalize when the odds finally tilt in your favor.
Stay at the table. Even with a smaller stack, wait for the right hand. Classic poker thinking applied to business.
And then there's that obsession with detail, the kind most CEOs would delegate instantly.
Oh, yeah. Those late-night calls, grilling executives on satellite specs, FCC filing details, regulatory hurdles.
Down in the weeds, but his philosophy was clear, wasn't it?
Totally. A leader who knows every layer, macro down to micro, can anticipate problems before they blow up. Proactive mastery.
Not just reactive management.
Exactly. And these habits, they seem quirky, sure, but they made him a true outlier.
In a world of flashy entrepreneurs chasing fame.
Ergen's quiet wealth, his understated life, his moves that were ridiculed until they reshaped an industry. It shows a different path.
It makes you wonder, are we too focused on outward success? Short-term wins?
Instead of cultivating the discipline and patience for real, long-lasting impact? It's a fair question.
Which leads perfectly into his, let's be honest, unpopular philosophy. Long-term opportunity over immediate comfort.
This really gets to the core of how he operates, his operating system, if you will.
His core belief is this fascinating paradox. Play aggressively, but live conservatively.
Every decision, personal or business, is about preserving the ability to keep playing the game. Like that disciplined poker player protecting their bankroll, always watching the odds.
And he applied that short-term pain principle again and again with incredible discipline.
Remember when Dish was losing subscribers, hand over fist to streaming? The pressure must have been immense to react with big, flashy promotions.
Things that probably weren't sustainable. But he resisted. Instead, he doubled down on buying more spectrum.
Which Wall Street called spectrum hoarding. Dismissed it as stubbornness, looked like he was just letting the core business wither.
But to Ergen, it was just disciplined patience, taking the short-term hit for the long-term gain.
And that shaped his leadership style, too. Very unconventional.
He's often said he doesn't need to be loved by employees or investors, right? Just respected for making the hard, strategically sound calls.
Yeah. Think about the auto hop feature. Automatically skipping commercials on recordings.
That caused huge lawsuits from broadcasters, didn't it?
Massive ones. But Ergen pushed it. He saw it as aligning with inevitable consumer behavior, even if it hurt relationships short-term.
How many leaders today are willing to do that? Make unpopular calls knowing they'll face backlash, but believing they see the future?
It's rare. This style, patient, contrarian, willing to absorb criticism and losses, it shows the power of ignoring the noise, protecting that long horizon.
Which is exactly why, even buried under debt with shrinking subscribers, he was still in the driver's seat for those multi-billion-dollar deals.
True power in decision-making. It isn't always about pleasing the crowd or chasing trends. It's about anticipating the world they'll eventually live in.
And that vision brings us to his silent power and how he navigated through some really intense crises.
He secured his power not just with wealth, but crucially through control.
That's key. The dual-class voting structure at Dish and EchoStar.
Right. It gave him decisive voting power, insulated him from activist investors or shareholders demanding quick returns.
Which was absolutely critical for him to stick to that decades-long strategy without being forced to sell assets early.
And this control, plus his personality, created this kind of invisible influence.
Totally different from the celebrity billionaires we often see. He keeps a super low public profile.
No Twitter wars, no splashy parties. His power is quiet but undeniable.
Expressed through the assets he controls and the deals he makes, felt in market shifts, not headlines.
And then came that mid-2025 crisis. For many, it really looked like the endgame.
The numbers were stark. Over $34 billion in long-term debt, liabilities over $40 billion. Analysts openly talking bankruptcy.
Public confidence, rock bottom. The spectrum strategy, widely seen as a fantasy. It looked genuinely dire. Survival felt uncertain.
But the turnaround, it was fast and impactful.
Those August 2025 deals with AT&T and SpaceX, they were more than just cash. They were profound validation.
Vindication for decades of conviction. It wasn't just about the money, it fundamentally changed the narrative.
Proved his vision right. And suddenly, EchoStar wasn't a struggling TV company. It was the gatekeeper of strategic assets for 5G, for satellite to sell the future.
Even regulators who'd been investigating his deployment obligations, whether he was actually using the spectrum he held.
They closed their inquiries. Satisfied by the new direction, it was a complete turnaround.
It really underscores his crisis philosophy. Don't panic short term. The long game can still turn the tide.
Crises weren't just problems, they were stress tests, proving the resilience of the strategy.
Survival itself became a competitive advantage. The real long game is often just about outlasting collapse.
So, wrapping it all up, Charles Ergen's story is just full of this remarkable tension, isn't it?
Yeah, that push and pull. Extreme frugality versus audacious risk. Decline versus recovery. Invisibility versus immense power.
It really is a masterclass in strategic patience and conviction.
And what stands out most, maybe, is that his greatest strength wasn't just tech or strategy. It was time itself.
His whole approach was built around patience, saving when others spent, accumulating assets when others mocked, enduring years of losses.
His long game was, as you said, about still being at the table when the decisive hand was finally dealt.
And that powerful paradox, the guy known for penny pinching and flying coach,
ends up orchestrating some of the biggest telecom deals ever. His restraint fueled his boldest moves.
It's quite something.
So, as you listening reflect on this, here's a thought. Could you live like that?
Could you sacrifice recognition, endure years of criticism, quietly hold assets for decades while everyone calls you wrong?
Just to prove, maybe a generation later, that your vision was right all along.
It raises a big question for today. Does that kind of long game even work anymore in our hyper-fast instant gratification world?
Or is Ergen a relic, a disappearing breed of entrepreneur from a different era, one requiring almost superhuman patience?
It's something to think about.
Because maybe the deepest lesson here isn't really about building a telecom empire. Maybe it's about the power of the choices you make every single day.
When to spend, when to save, when to take that calculated risk, and crucially, when to just wait.
And whether you're willing and disciplined enough to play the game long enough for the odds to finally, decisively turn in your favor.